Hey there, and welcome back to another episode of the Pure Property Podcast. So we have had a bit of a break, with a few holidays here and there, but we are back now. And the first episode we'll come back with is we're going to look at the future of rental prices amid the economic environment that we find ourselves in. So we're going over what the current market looks like in terms of the rental market, and what the future may look like as well. So, looking at the economic outlook, how that's affecting the rental market and how everything's performing at the moment. But just in general, Matt, how's things going? All right?
Yeah, as you said, so we've had a little bit of a break. So I think if anything, it's given us enough time to come back with a couple of good topics to go over. But yeah, all good my end. How about yourself?
Yeah, as ever.
Busy?
We're always busy, the score. Yeah. And now obviously it looks like the sun's gone for good.
I know.
And now we're just into the...
Early mornings are dark, evenings are dark.
Don't, yeah. Well, anyway, before we get too depressed, let's move on to what we're talking about. So yeah, look, economic pressures we find ourselves within the UK at the moment. What's that doing to the rental market, and what does the future of the rental market look like based on that? So, look, in terms of the current rental market performance, the latest Home Track report, which is a quarterly report, came out a few weeks ago. And it has stated that the current rental market inflation rate is, and that's the rate that rental prices are growing, is sitting at 5.4% growth. So that is positive. That is good, as we know. It's in very positive territory. We have seen a slowdown, though, haven't we, Matt?
Yeah, we have. I think, to be honest, I'm guessing that's a UK average, right? Across the UK
average, yeah.
Exactly. So I think it had to happen at some point. I think there's been a lot going on with the economy, different things happening. So I think we kind of forecasted to see that. It wasn't going to carry on aggressively going up. Yeah. At some point, it had to stagnate. So I think, to be honest, it's still positive, though. We are still seeing increases, as you said there, Toby. And that's a UK average. So we are going to have some of those regions performing better than that rate, and some a little bit lower. Yeah. But overall, I think for an investor, if you're looking at it, it's still pretty positive figures to be looking at.
Look, that, like you just touched on it there, yeah, very, very positive figures, very, very good. And again, that is the UK average. So, like the south, as we know, like London, the southeast, southwest, like these areas do drag that figure down. And we can look at stuff regionally later on in the episode, but that's where the average is. But still, a very positive average. And look, the one thing in the report, which is a consistent theme, is there's still massive high demand for rental properties and limited supply as well. So that's always going to cause an upward pressure on the rental prices, whether it's aggressively or at probably a more sustainable level that we're finding ourselves at now, or slightly lower, but it will be consistent because of that. You're not going to see it turn around and go backwards anytime soon, because the demand's there, but supply is still very, very low. And look, as you touched on, different locations are performing better than others. We're definitely seeing, and the report highlights that, but just in general, we've noticed it as well, like city centres, in prime city centres where affordability levels are still good or okay, are performing well, but they've come down a little bit, not as aggressive as they were before. But actually, rural areas, we're seeing actually a more of an aggressive rise in rental prices, which is naturally going to happen because they become the more affordable areas, and then people
ripple
move
effect,
out.
As we always talk about.
Yeah, exactly, ripple effect. I was just in Macclesfield on Monday, and I was speaking...
What are you doing in Macclesfield, Toby? Give us a little sneak peek.
Well, I was looking at a new development potentially for us to bring on. Really, really nice one. But we'll save that for another day. I'll keep that under wraps because it's not finalised just yet. But speaking to the local developers and sort of people involved in that development, we were just talking about rental price, etc., because they were asking me about the city centres we're working in. And yeah, even they were saying like they couldn't believe how aggressively the rental prices in Macclesfield were growing. They were saying they've jumped up, and they really couldn't believe to the level they've got to, and they are continuing to rise. And they were saying like every time a new property comes on, rental prices goes up, and bang, they're still getting taken. So, and for every rental property that come on, they have a ridiculous amount of inquiries coming in as well for people trying to snap that up. So
really good.
that's just an example where sort of outer city or rural areas as well.
It's funny because obviously when we talk about normally ripple effect, it's normally in the capital growth side of things, don't we? We always talk about that the prices are going up and eventually that ripple effect hits those, what we would call them, I guess, obviously a couple of away from the city centre, whether that be a few miles or a little bit further down the road. But it's people sometimes forget it's the exact same thing with the rental market as well.
Yeah,
as you just said there, and I think as well when we've seen projects in areas that you wouldn't consider to be desirable, as you said, maybe even Macclesfield, in terms of it's not as a massive city centre and not maybe as well known. But as you just mentioned there, you've got people queuing up, inquiring multiple times, probably fighting for that one property.
And also it's a commuter location. So I know we're just using Macclesfield because I was there.
It's a good example to go off of though.
But it's a commuter location. So again, they were telling us how, and we know this firsthand as well, but they were reiterating that people were jumping on the train there and going into Manchester. You know, it's easy commute for them, and it's cheaper than living in Manchester city centre. So again, that's another driving factor why, you know, as a company, we're always looking at, you know, where's good for capital growth and also rental growth and rental demand. And look, it's a no-brainer that these massive major city centres like Manchester, Liverpool, Birmingham, you won't have any problem renting your properties out because the demand's there. And again, supply is still limited. That they are building there, but there's not enough that they're being able to build, you know, quick enough. But you know, if you're looking for aggressive rental growth, then you know it's these pockets that we're looking at. So again, just depending on your investment strategy, that's the different angles you need to look at. But one thing is clear from the report that larger city centres are seeing growth slow a lot more. Again, not in a negative, so we're not in negative territory, but it's slowing a lot more, which then limits the overall average. And again, that's mainly because, as we touched on, the affordability levels there are being stretched now. Where prices in the city centres have, you know, explosively grown, it only goes to a certain limit where they can afford to still rent there or pay the higher rents, and it will naturally start to drop off.
Absolutely.
And you know what, it's one of the things that does wind me up when people say, you know, landlords are greedy, they're just pushing up prices, they're doing this, they're doing that. Now, I've said all along, the renters will determine the rental market, because as soon as they can't afford it and can't afford to pay it, they won't, and the prices will slow down or stop. That is it. We, as landlords, we don't control the market. Don't get me wrong, like, you know, as the market adapts and moves on, you know, prices, you know, we have to put the prices up to certain levels, but there will be a cap. We can't hold a gun to someone's head and force them to pay the rent. You know, they'll pay it while it's affordable, and all the time that these rents are affordable, they will continue to rise. And I know that's not nice for obviously renters to hear, you know, when they're being priced out of certain areas, but that is how, in essence, the market for renters works. You know?
Yeah, absolutely. Yeah, it is interesting to see, as you said, like, for example, if we go back to Manchester as a prime example, we know many people that were living there maybe 5 to 10 years ago that can't afford those city centre or M1, M2, M3 central locations. It's just too expensive nowadays, similar to what happened in London, why a lot of people have obviously commuted distance into London because of the affordability level. So, yeah, it's a very interesting topic that you said there, Toby, about how the renters are actually, in some way, without knowing, kind of moving the rental market in terms of or kind of shifting it from one side to another, whether the prices are going up or down.
Yeah, look, we know there's affordability challenges in the market among tenants. Obviously, you've got the rents are going up, the cost of living crisis, bills, all that sort of stuff, you know, economic pressures, everything going on. That is there. That is a fact. And like we've pinpointed, you know, the places that are unaffordable are hit first, you know. When we look at, it wasn't on this report, but one of the recent reports previously, we look at the affordability levels for renters, you know, and in London, we've mentioned this podcast before, like the proportion of their income for a single earner renting a property that goes on paying for the rent, it's just over 40%. So nearly half of their income as a single earner, you know, goes to rent. But when we look at the other major cities and locations like Manchester and that, it's still in the 20%, you know, so it's nowhere near the London level. So again, we can see that room for growth there. But look, there's no lie, there is affordability challenges there. And of course, we don't want to see tenants priced out of the market. But, you know, all the time that there are tenants there able to pay the rents in these city centres, they will continue to go up. And we will,
as you said, there'll be a shift of who the tenants are in those locations. So as we said, people moving out of the city because it's too expensive.
Yeah.
There will then be a new market of tenants that will move into the city centre.
Yeah.
Just will be happy to pay those higher prices. So it's not like the demand completely leaves the city centre and goes out to all of these, I guess, ripple areas like we called them.
Yeah.
There will also be a demand for those people that still want to be there, can afford to still be in the city centre and will want to stay there because they like being in and around it.
That's a good point. I mean, you take some of the people that are moving from London or down the south, and they're going
they
to
move up
these
to Manchester,
locations.
it's a lot more affordable.
Yeah, they're thinking that's cheap. So they're going there and thinking, yeah, no, I don't mind. This is a lot cheaper. And you'll see those people go there. But look, naturally what happens is the people then they get priced out. They will go to other areas. Again, these are the areas that we're looking out for, you know, the next wave, where it's going to ripple out of, as you mentioned. So it's all about sort of picking these pockets of where they're going to be. So as long as you're sort of staying in the know and focusing on the sort of the right locations and trying to be ahead of the curve, then it is fine. It's just a natural thing that happens.
Yeah, absolutely.
So let's have a look then at the regional disparities in the rental growth. So again, this is from the, as I said, the latest Home Track rental market report. So if we start with the Southeast, now look, actually saying that the Southeast has seen rental growth at a very good level. So here it's saying the report in the Southeast, 6.4% rental growth, Southwest 6.5%, and then look, this is where you see the disparity. London 2.5%. But look, a lot of people would think, oh, London can't be growing, you know, rents are very unaffordable there. Still going well there. And one thing I will say about London is, you know, when the pandemic happened, we saw people leave London, you know, that saw rents drop. And now we're seeing, you know, resurgence coming back into the city. So hence why rents are picking up a little bit. Then you got the east of England, 6.6% growth, West Midlands, 6.6%, East Midlands, 5.6%, Yorkshire, 5.6% growth. And then look, the Northwest, as we know, performing very strongly, 7.4%. The Northeast doing very well at 9.1% growth. Which is great to see. And you've got other areas of the UK, Scotland, 7.8%, Northern Ireland performing strongly, 8.8%. So look, across the board, what I would say there is actually overall, bar London, you know, they're performing very, very well. So that is a good thing. I mean, Manchester alone still doing very good, like 6.3%. Leeds 4.3%. So again, major city centres there still doing very, very well, which is good to see. Very good to see.
Yeah, absolutely. As I said, especially for these investors who are thinking, is it still good to invest into? As I said, we've seen all the challenges with the mortgage rates and different things like this that maybe have put maybe some investors to kind of question if it's the right time, or we can clearly see that the rents are still going up. So yeah, when the I guess if you were to look at it from a mortgage perspective of that rate dropping, then the rents at the same time are going up, and you're missing out on the increases year on year as well. Yeah,
that's the thing. I think when you look at the sort of dynamics of it all, it's one thing we're always trying to talk to investors about. Like, look, securing at today's price, you know, you're buying at today's price. Then your rents are going up, which means your yields are going up.
Yeah, year on year.
Factor in the sort of base rate and mortgage rate coming down potentially in the future. You then start to build in a good return on investment there, which look, short-sighted wise, it's more stretched than it has been for quite some time in terms of, you know, getting good ROI in properties. But like we say, you know, we're here for the long term. We're not just trying to get in and get out in a short space of time. And with that mentality, those dynamics I just mentioned there, that's where you have to, you know, think of the future, and that's where you're going to see your return on investment build up, you know. You know, especially if the market takes off again, you know, in the future prices go up. You've missed the boat on getting today's price. Prices go up. You know, rents maybe don't go up as fast. So then again, you get to that point, and then your yield's stretched, and it's even more of a struggle and doesn't look as appealing. And that's why we always say best time to buy is when?
Yesterday.
Yes. Yeah.
Funny enough, actually, we'll go back to a quick story. I know someone who bought in Manchester a couple of years ago, and they bought in, I think, at the time, and their yield was not an amazing or anything crazy, but it was around 5.5% to 6% yield, which is still considered to be fairly good. But when you've then factored in, obviously you'd look at that and maybe think, oh, okay, it's an okay yield. But over the past 3 years, I believe, of them having the property, it's now near a 9% yield.
Wow.
Which is just shows with the increase of the rental side.
Yeah.
It's just, as you said, it's the long-term thinking. It's not just that short-sighted, I could probably get a return in the bank, 5%, and it's less hassle. Well, people aren't forecasting that rents do go up, which is something that we always, I think, it's an area that I think is always really kind of sometimes missed, because people always talk about capital growth and the rental prices of today, but there's also a lot of rental growth, like we said, like we've mentioned here today. So
no, I think you're right there. And again, that person there, if they went out to go in the market and try and find the same property with a 9% yield, they probably wouldn't be able to find it at all. So again, it just shows like hindsight is one hell of a thing, and you know we do give examples like that to investors all the time, and we talk to them. But yeah, medium to long term game in this property business, and you will ultimately do well. You know, when you're investing in the right way. But looking at the future ahead, though, you know, so we mentioned what the price is doing now, based on what we've mentioned there. You know, supply and demand dynamics. One thing to note on supply and demand is, you know, we're seeing prices or rental prices slow, you know, as an average, but still doing strongly in certain locations. But to give some context there in terms of supply is down 24% compared to pre-pandemic levels. Wow. So, you know, supply is very, very low, and demand is actually higher. So what we're seeing is affordability levels is what's really sort of dampening, even though it's still very good, the rental prices. One thing to factor in, you know, if the economy does start to take off, you know, we see wages going up and sort of employment getting better, you'll then start to see people being able to afford more, and, you know, that will help with the rental market and the market in general. So that's something to look at. But in terms of the predictions, so they're predicting rental growth to slow a bit more, and they're saying it's going to probably go to about 3 to 4%, you know, for an overall at the end of the year, you know, going into 2025, which again is still strong. And if you've, you know, secured sort of in the past, maybe beginning of the year or last year, you know, you've still experienced the growth in the meantime, so that's done well. But look, they're still seeing it positive. I personally think it's going to do a little bit better than that, in my personal opinion. What do you think?
To be fair, yeah, I'm on that similar level in terms of I believe the same thing, just purely because of the fact of, as you said, when you actually kind of weigh everything up in terms of the economy, all that's happening at the moment. Obviously, we've had a new government come in that are probably wanting to make some positive impacts as well with some changes, maybe the wages going up, etc. I generally think that's only going to continue to boost the property market. Yeah. So I personally think it'll be slightly better than that. But to be fair, even if you were to take that as a worst case, you'd 100% take it, because it's still a massive positive.
Yeah. I think the reason I think it's going to be slightly higher than that, because I think, the affordability scenario, you know, and the economic outlook will dampen maybe some of the major cities. But I think you'll see it more aggressive in the other outer city locations, the more rural areas, you know, commuter locations. That's why I think it will still be quite good. Yeah. But look, we'll see. Either way, you know, across the board, they're looking at, you know, positive territory for rental prices, which, you know, of course we want to see. And while supply continues to be low and demand continues to be there, strong, there's always going to be an upward pressure on the rental prices as that continues, which, look, that fundamental, as we know, is not changing anytime soon, especially with more landlords actually technically exiting the market at the moment with all the stuff that's going on, which in our next episode we will cover in terms of, what Labour are looking to bring into the rental reform and changes that are going to happen within the rental market. We're seeing landlords exit, so we're actually seeing supply decrease at quite a high rate in some places, which is something to be aware of. But look, in conclusion, I think the rental market is in a good place. It's stable. It's strong. The renters are determining really sort of the growth and how that's going at the moment. Although affordability is stretched in the right areas, they're still able to afford it. And we're seeing growth, and I think that will continue. I don't see that changing anytime soon, and I'm very, very positive about the rental market. Seeing yields grow, seeing the ROI grow on people that are securing today or have secured recently or a year or two ago. That as that continues, they'll be in a great place with their investments, which is going to be good to see.
Yeah, absolutely. No, I think it's a real positive side of things to look at it from an investor's perspective, especially also whether you're in the market at the moment and you've got properties and looking to continue to buy it, or even if you're a new investor. I think it's still a real positive to take. Another
thing, actually, just to end on there, is a lot of the stuff we look at in terms of data in the market. The report there from Home Tracker is Zoopla, so that's properties going on the market. There's other sort of data outlets, the Office of National Statistics, which are a little bit more conservative, with the figures coming out there, but what they don't factor in, whereas Zoopla does, is it's the relets. So when we talk about relets, is there's people that are in rental properties, their contract comes up, because they don't want to enter the rental market because they're seeing prices go up, they choose to stay in that property, and the rents don't really then increase. Like a landlord like me, for example, I tend to leave my rent the same, or the letting agent might recommend a slight increase, but it won't be to market levels, because I want to keep the tenant there, if they're good and happy. I'm happy to take less than a market rent if I've got a good tenant there.
My one as well.
So that's not factored in. Really, what that's looking at the data, the Home Track report, is this is new lets coming into the markets. When a new property comes on, and that's for people, buying a new property to rent out. You'll be going on the open market, so you'll be going at the new let level, and that's going to be higher. And as we keep saying, these letting agents, because the demand there, the price keeps going up and up and up. So, in that point of view, for someone might be sitting there and thinking, well, I haven't had too much growth in the last 6-7 months. What's going on there? It was because you already got a tenant in the property potentially, and when you come to relet, you haven't thought about it. So,
I think sometimes, it does depend on the letting agent as well. Sometimes. Yeah. You need to speak to your letting agent. Not as we know, look, there's good and bad letting agents out there, and some of them probably at some points for an easy life won't always take into consideration or think that, actually the rents have gone up in this area.
Yeah.
Sometimes as a landlord, you should be also keeping an eye on it yourself, just to see, look, and ask the question to them, have rents gone up?
Yep.
If they have, then maybe you might want to increase it, as you said, Toby. Maybe you want to keep it the same just because you're happy with the tenant in there and
good point. It's
an affordable price. So I think it's something that it doesn't hurt to ask the question to your letting agent who are looking after your property, especially if you're nowhere near it, because sometimes you've got an understanding of how that market maybe is up there, or if you're investing from the south or overseas.
It's a good point. It is very important to do a portfolio analysis, like you said there. Speak to your letting agent. Get them to let you know what the rental prices are doing, but don't just take their word for it. Go on Rightmove, put your postcode in, put 3-5 mile radius. The lower the better.
Yeah.
If you've got a mile radius and you've got 10-12 properties coming up for the same similar property, give you a good indication. Put it in Rightmove, put it in Zoopla, have a look what the same properties in your area are renting for, and have a look. Does that stack up to what you're renting for? Because then you can have that conversation with your letting agent. They'll say, yep, we're seeing this, and you can say, brilliant, I've seen that as well. When your tenancy comes up, you then may look and say, look, I can up this here, especially with mortgage rates and stuff. It may be needed for some landlords, and it's very, very important.
When you look into it from a side of things, of it could be an extra 25, it could be 50 or £50 more, or even something more a month.
Yeah.
Add that across 12 months. It does make a definitely a massive impact, especially on your yield overall. And as you said, if mortgage rates have gone up, that can then counteract that.
I do think as well, if you have got a good tenant in, my personal
Yeah.
opinion is, you know,
I'm on that same line.
You know, you can raise it, and I think again, the tenant has to understand. Like, if they were going on the market, they were going to be paying more money. But I just think always, you know, not doing it to the full market level.
Of course not,
and obviously, then they'll appreciate that as well. Like, oh, thank you, you know,
Likely to stay longer.
You know, and hopefully, obviously, you'd hope they'd be able to afford it. But
you find that middle ground, don't you?
Yeah, really? Exactly. I am sort of all for, you know, if I've got a good tenant, I want to keep them in there.
Absolutely.
So yeah, that's just my personal opinion. Some landlords may differ that, but
as we said, like it's up to you in terms of asking that question. As you said, Toby, it's a great idea to do that portfolio maybe once a year. Just ring around the agents that are looking after your property, whether that be one or multiple, and just actively get an idea. Because even if you have an idea, you don't have to put the rents up, but in your mind, you then know. Yeah. Well, look, if this person ever left, for whatever reason, you know roughly what it could be renting out for them. And you can even work out in terms of the numbers if that difference is, it could be quite, especially if you've got a couple of properties and they all could be going up an extra £50 to £100 a month. Yeah. It could make quite a big difference.
No, that is good. Yeah, good. Well, hopefully that's been helpful for people. Overall, just to conclude, you know, rental market strong. It's going to continue to be strong. Fundamentals are there. You know, dynamics are there to sort of really see the market count as it is. And you know, if you're securing at today's price, or if you're secured at a previous price, and you've got the properties, you should see your yields and return on investments grow, which is great and positive. You know, as investors and landlords, that's what we want to see.
Yeah, absolutely.
Right. Thanks for joining us on this episode, and we will catch you on the next one. See you later.
Bye-bye.